Why are commodities weak in an environment of tight supply and increasing demand? Let's talk about it all. Commodities have weakened very significantly in the past year. In fact, if you look at the entire table of the most important commodities, from oil to natural gas, from copper to wheat, the fact is that all of them are trading well below the levels at which they were prior to the Ukraine invasion. The supply element in commodities looks significantly more bullish today than it did a year ago. On the one hand, we can see that, for example, in oil, there's not just tight supply because inventories remain below the 5-year average, but it's also very evident in the decisions of producers. OPEC has decided to cut about 1.2 million barrels a day, and the Russian exports to developed economies have also declined significantly. If we look, for example, at copper, the challenges in terms of supply remain, particularly when we look at the requirements that the energy transition in developed economies will deliver. Think about this. If we look at the commodity spectrum into the energy transition, copper, aluminum, and lithium and all the rare earths will be much more demanded than today, and there is simply not enough mining compared to those requirements. And if we think about it, more importantly, is that the amount of new mines required for the energy transition and the electrification of transport is so massive that it makes it almost impossible to think of the energy transition as a success if we don't start today to invest massively on mining. Okay, so we have tight supply in oil, tight supply in the most important commodities, and also we have the main producers and exporters of cereal in the middle of a war that continues, unfortunately, with very significant humanitarian implications. So, tight supply on the one hand. On the other, demand is robust. The Chinese reopening may have been weaker than estimated, but it doesn't mean that it is weak. It is still a 5.5% GDP growth economy. It is still an economy that is investing massively in its growth for the next years, and it's still a huge importer of commodities, particularly energy and industrial commodities. So the Chinese reopening may be weaker than expected, but it is very, very strong. At the same time, India continues to grow well above estimates, so demand coming from the emerging economies is incredibly strong, and supply remains tight. So, why are commodities so weak? Well, to start with, we always tend to forget that apart from supply and demand, there is another important part of the picture, which is monetary, the monetary aspect. The monetary aspect is critical to understand the evolution of commodities, particularly in spot prices. Rate hikes have destroyed the commodity complex, and monetary contraction from central banks is also making commodities in general decline to levels that very few would have expected in the same environment that we live today, if that had been estimated a few years ago. Think about it. So, why is the monetary aspect so important? At the end of the day, commodities are measured in units of currency. And when rates rise and the amount of money in the system is contracting, the reality is that commodities suffer as well because it is more expensive to store them, more expensive to finance margin calls, much more expensive to hire freights, etc. And certainly the entire monetary aspect of the investment in commodities suffers with higher rates. It is more expensive to finance those investments, and with monetary contraction, which means that the amount of currency that is going to relatively scarce assets, commodities, also declines. Ultimately, the monetary aspect is much more important than the supply-demand environment in a period in which there is no tension, or at least a crisis in either side. It's tight, but it's not a crisis environment. And at the same time, we need to understand that the monetary aspect was also behind the abrupt rise in commodities. It is easy to blame the Ukraine invasion. It is easy to blame on geopolitical catalysts, but a massive increase in the amount of money in 2020, 2021 certainly preceded that massive increase in commodities. So we need to pay attention to the monetary aspect before we look at the differences between commodities and how tight the supply-demand balance is in the different ones. And it is pretty evident that the energy transition and all these programs of net zero, etc., that all governments are implementing will require massive investment in natural gas, massive investment in mining of copper, lithium, rare earths, etc. It is extremely dangerous to think of the energy transition to a renewable and more electrified energy mix without thinking of the amount of mining that requires. And in terms of investment, we are not just below what would be a normal environment to deliver on that amount of commodities required to build all that renewable infrastructure. No, we're not just slightly behind. We are way behind what would be even marginally feasible to deliver on that energy transition. And it will require more natural gas because there is only one way in which the energy transition is efficient and at the same time complies with security of supply, which is with natural gas and nuclear. Without natural gas and nuclear, there is no decarbonization. The only thing that you would achieve is much more utilization of coal. So, underinvestment, supply tightness, demand, very important factors. But without looking at the monetary aspect, we may forget about the most important driver of the marginal price in commodities. Therefore, while rate hikes persist and money supply continues to fall, commodities are very likely to continue to be weak, and supply cuts are interesting geopolitically, are interesting for a debate. But let's think about this. Saudi Arabia pledging to cut 1 million barrels a day is basically just a measure to offset the increase in production and exports from Iraq and Iran, which is basically both of them are moving to their previous highs. So ultimately, in terms of exports to the world, the latest supply cuts announced by OPEC are not necessarily a bullish signal. They're simply a response to a price that certainly is not adequate for producers. So we need to pay attention to all these things. We will continue to talk about them. Please leave your comments below, subscribe to this channel, and keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.